Aaron, thank you. 547, wake up money time. Home prices tumbling, the number of foreclosures around the country soaring. So, do homeowners get some relief from the massive foreclosure rescue bill, or will the White House veto it as promised? And here's big news. Can the new IndyMac Federal Bank really be trusted? Street Talk radio host Lance Roberts joins us now to talk more about this and more. It was a busy weekend financially. Good morning to you. Good
morning.
So we have this, let's start with the Freddie Mac and the Fannie Mae bailout package that people have heard these names. They may not know exactly what these companies do. Give me 20-second primer on what they are.
Well, basically, these are companies that were that have implied government guarantees from the U.S. government to basically take in mortgages. So you go down to your local mortgage company, they write your mortgage. In a lot of cases, if they meet certain requirements, then those are sold off to Fannie Mae or Freddie Mac.
So we have all these crummy mortgages, and suddenly these companies are stuck with them, and their stock price, certainly in the last week and months, has just plummeted, just been gutted. How important is it that the government prop these companies up with these guaranteed of dollars?
Well, two things. First of all, is that backing these companies is important just simply from the standpoint of confidence. What caused the crash in 1929 was basically people becoming afraid of the banking system and taking all their money out. So this is one thing the government has to avoid right now. It's just, we have IndyMac, Fannie Mae, Freddie Mac. It's just all these credit crisis bear stearns, and that's really starting to weigh on the confidence of investors as well as consumers. So they've got to avoid that. Now, as far as the $300 billion bailout package, the government's has agreed to veto. There's been several of these packages tried to be put through right now, and they keep getting approval, then they get dropped off. The problem is that ultimately doesn't bail out the people that need it, which are the people going into foreclosure. 40% of foreclosures are unoccupied homes. So bailing them out really doesn't help. It doesn't keep anybody in home because there's nobody there to start with. It does bail out the lenders. The problem with bailing out the lenders is these are people that caused the problems in the first place.
Made the bad decisions in the first place.
Exactly.
To give home loans to people who probably ought not have been in home loans to begin with. So let's look at how this affects the people who are being responsible with their dollars. And people they've got mutual funds invested in these companies in some fashion. What happens starting today, you think? Well,
first of all, the markets we are now in a different market than we were before. This is technically now a bear market for a variety of reasons. And right now, it's just more important to conserve what you have, protect the principles that you have invested if you have investments. But more importantly, just things are not going to get better anytime soon. We're very early in this cycle. There are going to be more things coming. We've got a lot more things to deal with in terms of potential bank failures around the country. Most of them would be mid-sized regionals or smaller banks that got involved in the mortgage lending practices. We'll see a lot of those failures. But there may be some more big boys still coming.
And as you say, it is a cycle, so it will go around.
Oh, absolutely.
It's how you weather it and how you plan for it.
Exactly right.
Lance Roberts, we appreciate the wisdom this morning.
Thank you.
You can learn more about these topics. Also, how the Federal Reserve is hoping to protect homeowners from shady lending practices under the business tab of our website, myfoxhouston.com.